Good afternoon, everybody. Welcome to the Bitcoin Mentor Q&A. As always, I'm Ed behind the Live Free BTC handle. We're joined here by Nathan on the Bitcoin Mentor handle. And we have, as a special guest today, Bob Burnett. If anyone would like to come up at any point and ask a question or just join the conversation, anything regarding Bitcoin, we'd love to have you. Thanks for coming. How you doing today, Bob? Everything going well?
Good afternoon or morning or evening, I guess, wherever you are in the world. Yes, I'm doing well. How are you?
Good, good. How are you, Nathan?
I'm doing well, thank you guys. Yeah, it's been a great day so far, trying to keep busy, keep things going, but no complaints for the Monday to kick off the week.
Excellent. Bob, do you want to give us a quick background on maybe your Bitcoin journey? I'm always curious how people get into Bitcoin and maybe a little bit of backstory that you'd like to share.
Sure. So my background is from the personal computer industry. So I spent most of my career going back to the mid '80s in the personal computer world. Most notably as the chief technical officer for Gateway, the old cow-spotted PC company. And I left there, so I was in that business till the middle part of like around 2004 is when I really left that industry, and I started a technology incubator and did that for about a decade. When my Bitcoin journey really began, I in 2017 received a phone call from an ex-Gateway person asking me if I could help design and build some Ethereum mining servers for a farm he was doing. And so, like a lot of people, my journey begins in the shitcoin world. And although in a different way, I wasn't trying to buy shitcoins and chasing number go up. I was given an opportunity to design hardware for that market, and I approached it like a computer guy, a fiat mentality computer guy. And this guy wanted several hundred of these servers, and so we decided to help him with that. And at the time, that was a hard thing to get. The hardware market in 2017, I would argue even today, we don't see a lot of really well-designed hardware. It's pretty amateur hour stuff in a lot of ways. And so we also, because of some old relationships back from the Gateway days, me and Keith Thomas, who is the president at Barefoot, I'm the founder and CEO, he's the president. We were both ex-Gateway. We had long relationships with NVIDIA. So we were able to get the GPUs in 2017 to build this equipment out. So we did that. We fulfilled this order. It got us started in the business. We then started going to other people to see if they would like to buy the hardware as well. A lot of the people that said yes, but only if we would host it for them. So that forced us into the hosting business, essentially. And then we were doing fairly well selling the hardware, and we were doing fairly well hosting. And we saw that our customers were doing very well, though, too. So we started to take the money we were making and pour it into Ethereum mining equipment of our own. After doing that for quite some time, maybe 6 to 9 months, we started looking at really what Ethereum was and didn't really like it, both for technical reasons and for governance reasons. It didn't resonate with us. Although we were still doing okay selling that hardware, and we started to look elsewhere, found Bitcoin, and it worked, right? All the things that I'm sure all of you are here for, the transparent nature, the true decentralization, the finite money supply, all those sorts of things really got us excited. So we started pivoting the company away from Ethereum and to Bitcoin. Unfortunately, we couldn't get access to the ASICs themselves, the chips. So we did the next best thing, which was we became a distributor for Bitfury equipment, which at the time, Bitfury was really the number 3 company in the world selling equipment after MicroBT and Bitmain. So that led to us eventually abandoning Ethereum completely. We've been kind of a pure Bitcoin company for about 6 years now. And we can maybe get to it later. I'm hoping to come full circle and actually be able to start building our own Bitcoin equipment here in the not too distant future.
That's very interesting there, Bob. I'm actually kind of curious as I'm parsing it apart as well too. Were you already kind of in the sound money camp? Like, were you preconditioned to be ready for Bitcoin, or was like your road down economics and stuff beforehand all involved?
Yeah, I have a degree in computer engineering. I have a minor degree in economics, whatever the hell that's worth. There's a whole long story about how I became disillusioned with the fiat system in the early 2000s. Basically, when the dot-com bubble burst, I'll kind of cut this one short. When the dot-com bubble burst, it cost me a lot of money, and I started to look outside of the existing establishment system for answers. And I found Austrian economics then. So it was in like the 2002 to 2004 period that I really put in a lot of effort and started reading, whether that was the work of Hayek or Rothbard or some of those folks that are now kind of prevalent within the Bitcoin community. So I had already found that piece and was disillusioned and untrustworthy of Wall Street and the fiat system.
I'm kind of curious, jumping back in time a bit too, from your time in Gateway and the dot-com bubble crash. I'm wondering, either with maybe Bitcoin adoption and the internet, or maybe something else going on in the space right now, if you see any parallels to that time.
Oh, there are massive parallels. The period of really the early 90s through the early 2000s was one where there was a lot of economic prosperity. We can see there's a lot of loose money, though. So we saw a lot of venture money being thrown around, especially into technology circles. To be honest, I'm sure I benefited from it, even though my company, Bitcoin, we were successful. We were not some company losing boatloads of money, but still having a high market cap. We were like in the year 2000, we were doing 10 billion a year in revenue. We had $1 billion in profit. We were making 10 million PCs a year. So we were doing something very real that I think justified some level of economic reward. But we were also seeing these early days of, for those that are older, there were all these misallocated capital going into internet companies in a speculative way. And that's what really came, whether it was, pets.com and this M&A activity that was just out of control, massive valuations for projects that were just ideas with teams that had no execution experience, like just kind of some very frivolous, high risk behaviors that are all indicative of what happens in a fiat world, right? The Cantillon effect, the necessity to beat inflation, to take risk and not save. I mean, all these sort of high time preference behaviors were very, very prevalent there. And of course, we sit here today in a world where the returns and the stock market have been, in my opinion, absolutely ridiculous, where real estate values, both residential and commercial, have gone completely to outrageous levels because of the loose money, and it just feels the same way. The only difference, though, between then and now, so we're like 22 years later, is that people like me have lived through a couple bubbles bursting. So I'm 60, so I'm still how can I say, I'm I guess it's all relative, right? I don't feel old. Like, I'm still active. I'll put it that way, right? I'm still active. I'm still out there doing things. And I've already lived through two of those. And then if you even go back to when I got out of college in 1986. We were in the midst of just a deep depression, right? Um, and and so I've felt the sting of kind of three of these thus far. I think that there's enough people that have been alive and been adults in a period of time where they've been stung, that they can feel that something isn't right now, that something is amiss, and it's more than just a small niche group of people that feel that way. I think it's more pervasive across a much wider group of people, and we see that, I think, with what's coming in the election, and just, I mean, frankly, the growing acceptance of Bitcoin is indicative of people who are worried, because they feel something is amiss. Back in 2002, nobody saw it coming. I guess 2001, 2002, that bubble, nobody really saw it coming.
It's very interesting to think how that's going to change the dynamic. You're right, because we have generations of people now that have had multiple, like, once in a lifetime economic events, and so you'd expect that even from like the state's perspective and the individual's perspective, they're both playing the game differently, knowing that that's in the cards, and then how they might respond in kind with that. Ed, it seemed like you were going to say something there before I jumped in.
Yeah. I just wanted to kind of back to what Nathan was saying, how there's definitely parallels that we're seeing between like the .com days and now with like crypto or Bitcoin as a space. And I think the ICO craze of maybe 2017 or so could be related to that. And I think AI is kind of going through this hype phase right now. But I'm curious, Bob, what you think might be noise in general. Maybe if you want to note on just a general economy, or maybe even in the Bitcoin space, things that you consider noise and we shouldn't be paying attention to. If you have any insights on that.
What we shouldn't be paying attention to.
Yeah, things that maybe are like, I know you do like the mining stuff. Maybe there's things that are just floated around as like more of like a hype or like a marketing thing and aren't necessarily important, like more signal.
Well, I don't know if this is where you're going, but or the angle you wanted me to take on this, but I spent actually the last couple, over the weekend and earlier today, I spent. Let's say, I guess this is something they should pay attention to, but I'll twist your question a little bit. I read both the paper the Fed published 2 weeks ago on the ability of essentially it was a paper on the ability of the government to function in a world where Bitcoin exists and run deficits. And then the second paper by the ECB on the distribution of wealth and how Bitcoin could be unfair to the world in the way that wealth gets distributed. I read both papers. The Fed one is highly technical. I couldn't follow 100% of the math. Just I'm a little rusty in some of those areas. But the conclusion of that paper which I actually agreed with. It's just the question of whether or not it's positive or not. The conclusion of the paper is the government cannot run deficits and live in a world with a permanent deficit and coexist with Bitcoin. That Bitcoin erodes the ability of the government to run deficits. And so either Bitcoin must be banned or Bitcoin must be heavily taxed to offset the drag that it would create on the government. So I found it fascinating that they reached that same conclusion. The other paper, if you haven't read it, I highly recommend reading it, just because it is the greatest consolidation of Bitcoin FUD ever created. And so the reason I bring that up here is because we were talking about kind of noise, is that it's very obvious to me that these two papers, which were released 4 days apart, were done in a planned manner. The world's two most important central banks released papers from two different perspectives, chastising Bitcoin. And I know that the next wave that comes is where the mass media, especially the traditional mass media, will be taking excerpts from these reports, generating articles for the mainstream of the world, and try to tell them why they should be afraid of Bitcoin, why they should reject Bitcoin, why certain proposals in different jurisdictions to try to ban Bitcoin, restrict Bitcoin, tax Bitcoin can be justified. And they create this circular messaging where the mass media, the Wall Street journals and the Washington Post and these kind of organizations write the articles supporting the using the justification from the paper from these so-called experts, and then the politicians then use both of those to propagate platforms and positions that are opposed to us. And you can just see that the game plan kind of laying out. And I write a monthly newsletter for Financial Advisor magazine, which is great because I get to communicate to 150,000 financial and wealth advisors every month. And I dedicated that entire paper, this 8-page paper, my 8-page paper this month, to telling them, look out, because you're going to get all this FUD, and here's the FUD that they're going to tell you about, and try to use it as a mechanism to scare you away from directing investments toward Bitcoin. So that's the noise that's about to come. Like that's I think what's happening is that, and it goes back to, there's the quote I'm sure you've all heard. First they ignore you, then they laugh at you, then they fight you, then you win. Right? There's that progression, and we are on the whole clearly centered in the fight stage, and there are a few laggards who are still ignoring it. There are a few people still trying to mock it, but the people that ignore it are I feel really sorry for them, because they are going to get hurt so badly. That they don't even understand that they're shorting something that should never be shorted by not participating, because it's maybe the first time in history that we have something where you could choose not to participate and really get hurt for lack of participation. Because you can't argue that about, if you chose to not buy Apple stock or Tesla stock, there's generally no harm that comes to you because of it. But Bitcoin is the first thing where lack of participation is equivalent to shorting it, and and that can cause, massive harm. So I've said this a couple times before. One of my favorite quotes is from a song called it's called Free Will by the rock band Rush, and I love the line in the song where it says, "When you choose not to decide, you still have made a choice," and it exemplifies that very thing. So anyway, I went a million miles away from your question, but
that's okay. No,
built some
no,
airtime,
that
so.
was that was a great answer.
That was great.
I wanted to ask it mostly because there are a lot of people that might be into Bitcoin for only a couple of years, and they might not be familiar with the FUD that's been circulating for, I'd argue, over a decade now. Things like that, and I think they definitely say things like what you were mentioning about how Bitcoin, the fiat system cannot exist in a world where Bitcoin also exists. It's going to expose it. It's going to cause capital flight to Bitcoin. And I think that they bring that up to maybe keep the markets feel uncertain about where they're going to act. They just kind of say it. They just poke at it every once in a while, keep introducing this FUD so that markets remain uncertain. And I think that does a lot of damage, I think, to a lot of people that aren't in the Bitcoin space and don't necessarily know how it works on a technical level and just haven't seen it historically, like, proven to fight past this FUD and just continue to go anyway. It really doesn't matter. But like I said, those new entrants to the market are definitely affected by it more so. Nathan, did you have any comments on all that?
Yeah, I was just thinking about the, then they fight you sort of stage here thing too. And, I'm afraid that, again, I'm the eternal optimist, but I think in the short term here that there's a good chance it gets kind of rough. And what I'm kind of reminded of is even just in recent events like Trump on Rogan. And what I'm thinking about is that the tools that they would normally turn to in order to try and, combat Bitcoin, they would turn to their corporate media, basically propaganda outlets, and then start pushing this information through them. But I think like that podcast episode in particular was a real signpost that the corporate media is on the way out. Their control, they've lost it. And so without having that kind of centralized ability to get on message, and additionally, what I was reminded of was back in the COVID crash, when the Fed came out cutting interest rates and the market didn't really seem to care. It didn't seem to respond to that. And that it wasn't until, I believe, the fiscal side, until the government spending kicked off, that we started to see things kind of change. And so if I'm thinking about this kind of from the adversarial standpoint, if Fed speak and interest rates doesn't have the influence that it once does, and the corporate media doesn't have the influence that it once does, I worry that they're going to go hard on the regulatory side of things and really try to, either through taxation or some other threats, really try to use the stick to try and curtail what ultimately they can't stop. Bob, I'm just curious if you have any thoughts on that idea.
Well, I agree with you. I like I said, it was interesting to read especially the Fed report from the perspective that I think it was accurate. So the conclusion was accurate. It's just what side are you on? Do you view the conclusion as positive or negative? And, I view it as positive and an affirmation of Bitcoin. But as you said, I think we're not in the early stages of the fight stage. We are like in, I think, the heat of the battle now. And as you said, the tools they would normally use, or weapons, maybe would be a better word, they would normally use to fight these kind of battles are not available, because as you said, the mass media has lost its influence. And that's the first time ever, really, right? Since newspapers have been printed, the ability of the state to heavily influence the message that gets to the people, not just in the US, but around the world, has been pretty high. Right? It's very apparent that I'm writing a different paper, for instance, on the time frame in which the Fed was created, and the degree to which the forces that were behind the creation of the Fed use the mass media and the elites within the education system to create the FUD and support for the Fed in the public's eye was tremendous. And it's the same sort of thing happening here. It's the same game plan, right? They like to use the academia, people with a doctorate in whatever, and they like to hide behind peer-reviewed papers and all these sorts of things. Interesting sidelight, the ECB paper, I found it very interesting when the at the bottom of the ECB paper, it thanks all the people who, beyond the two authors, who made comments and contributions to it. And I didn't recognize a single name. Now, that doesn't mean any of those were necessarily bad people, but I can say that if they had at least included a few prominent people from the Bitcoin community, that I would have recognized those names. So it's very apparent they can't control it. And as you said, the Joe Rogans of the world and the Twitter and places like this have created that problem. But on top of that, the true decentralization of Bitcoin's infrastructure creates the other problem, because there's no head to chop off. There's nobody to imprison. I think their backup is against the wall, and there's a certain desperation that is starting to take hold. And I think while I'm not here to endorse any one candidate over the other, it's clear that to me that Trump is better for Bitcoin than Harris, but he's far from perfect for Bitcoin. I mean, he's got a lot of warts and a lot of things, even relative to Bitcoin, that worry me. But he's at, I'd say all the net sum of that whole thing is positive. And I think that in Europe, there's also kind of some divisions taking place where the Western portions of Europe, the Western countries of Europe, which are very dependent on the ECB and its policies, are starting to become at odds with the eastern and southern sections, especially the eastern sections of Europe, which are much more open and amiable to Bitcoin. And so these lines are kind of being drawn. I noticed that, especially I was in Prague. I spoke at BTC Prague in June. I had been there the year before too. And there's a whole different spirit there. But I think the ECB, the Europeans are probably even more afraid. But I guess it's kind of that same thing. Like to the degree the fiat system lives, the dollar will be the last to fall, right? So the euro is closer on the timeline to irrelevance than the dollar, and I think they're starting to fear it more, and the desperation is getting greater.
Yeah, and I think
I agree.
as we see like tools like the internet take away their power to manipulate people through propaganda, I'm looking forward to the day when Bitcoin takes away their power to endlessly print and fund those things. And I think that will go, that those tentacles that they have and everything, whether that be the state or the bankers or whatever it might be, these people have a money printer that allows them to essentially do whatever they want and influence whatever they want. And Bitcoin is going to subvert that. But yeah, go ahead, Nathan.
I was going to say that I agree the dollar will be the last to fall there, and that you're going to see a lot of struggle. But when you have an option to opt out, I think you are going to see, like, the ECB should be afraid, because I think ultimately that coalition is not really sustainable. There's too much difference between the economies and even cultures between the countries. And I think you will see this fracturing of kind of large centralized states in that sort of same form. And even just jumping back for a second too, just touching on Trump. Now I can't vote in the States being a Canadian, but I'm even not sure if that would stop me these days. But for me, even it's just I'm single issue. If there's a chance to free Ross, it's like fuck it. That's good enough for me to say I think it's worthwhile, right? Like that. That to me is just it's one of the few. It's one of the few things in this world that like actually tugs at my heartstrings. And I have this huge emotional draw to be like I'm hoping he gets in for him, for Ross, and for his family. Pat, motorist, you've been up here for a little bit. Did you have something you want to add or a question for Bob? And also, a
Yeah,
quick reminder to the
absolutely.
audience: if anybody else wants to come up, please do come up, join us, ask any Bitcoin questions. Anyone on stage, we'd love to have you.
Yeah, 100% supported everything you just said, Nathan, on Russ Albrecht. So Bob, I was familiar with the ECB paper because it was all over Bitcoin Twitter. Everyone was roasting it. But thank you for bringing to my attention the Federal Reserve paper. Now I have some homework to. I didn't even know that they released a paper a few days before, so I have a homework assignment to go read that one as well. And hopefully, with my degree in economics, is not too much of a handicap for me to understand it. But I heard you say at Pacific Bitcoin last year, where you said something which really surprised me, which is not something I had considered. So I've been promoting Bitcoin. I've been fighting the FUD, as you've been mentioning, Bob, regarding Bitcoin mining. I've been fighting the FUD by talking about how Bitcoin mining can benefit society as a general benefit to society. For example, three ways that I could think of off the top of my head is it helps balance the electric grid, and it also helps use flare. Energy companies can use it to take advantage of flare gas, which would otherwise be wasted, and also a way to tap into energy sources that are too remote to be used for a regular electric grid. And I think all those are great positives for Bitcoin mining. But do you think that there's any danger in citing these as ways to promote Bitcoin or to promote Bitcoin mining that can actually be a detriment? Do you think that so that now people are mining Bitcoin not because they want to mine Bitcoin, but they're mining Bitcoin because they think it's going to help balance the grid? Do you think there's any danger in promoting mining as being a general benefit to society rather than just mining to help the Bitcoin network and to make more Bitcoin?
Yeah, I think there's a couple dangers. I don't want to discourage anybody from saying those things, but I think it's important to say them in the right context. So the first one is as it pertains to things like balancing the grid and curtailment and kind of all these grid related functions. I think we have to be careful about overstating it, because globally this year there will be about 27,000 terawatt hours of electricity generated. The Bitcoin network current usage, I estimate, at 160, which puts it at like 0.5% of the world's electricity consumption. There are spots of concentration right now, which, by the way, is another negative, specifically in Texas, where there is such a high concentration of energy, it can do the things that you talk about, where the curtailment can have a serious impact, that the base load really helps the stability and can promote the development, right? It helps in the capitalization and the costs. But I don't believe Bitcoin mining can ever get big enough to be more than maybe 3% of the world's energy consumption and so electricity consumption. And I think the economics will dictate that. So our ability. Sorry, I don't understand. So our ability to do this in the long run is really constrained, right? So there are spots where it can happen, but we can't do it for every place in the world. So that's one thing. You're right, and I'm actively working, for instance, in like the development of the stranded energy stuff. Now, like I'll share with you guys, one of the things I've done recently is we've bought some wells. So we've bought our own wells, and we're not too far away from mining directly on the wells. So I'm not talking flared gas. I'm talking like just stranded gas. I could see some people saying, well, And so when we say stranded gas, what we've done is we've bought wells that exist that are so far from a pipeline as to practically never be useful to anybody, right? So the two choices are mine Bitcoin on the well or cap it and leave the energy there forever. So I'm of the mindset that, hey, we're utilizing a resource that would otherwise never be put into play, and we're going to do it in an environmentally friendly way. But that has really no negative consequence. But I think there are people out there that will still look at it in a very negative light and say, you should leave that stuff in the ground forever. I also think that when we look at mining, I'm going to take a little bit of a twist here, that we're on the cusp of some big changes. So I mentioned earlier that I thought that Bitcoin mining would probably cap out around 3% of the world's energy usage, electricity usage. And that's for a couple reasons. The first one is, if you think of all 27,000 terawatt hours of energy produced annually, and you map the cost of that energy, you'll see that it sits somewhat on a bell curve. Okay. And the center of that bell curve is around 14 cents per kilowatt hour for the energy. And so the Bitcoin mining industry today is largely existing in the sub 6 cent per kilowatt hour range. So we're sitting at a small end of the tail, right, of the distribution. And even though we may demand more energy, there may be some desire for more electrical consumption. There's also economic pressures that says, well, you can't slide further up the energy curve, right? So especially since most of that energy that sits on that bell curve is grid based, in my opinion, the only way to add more energy and still sit in that cost profile is off grid. That, we're going to see more and more and more energy move off grid, which, by the way, takes away the grid balancing and curtailment and all that other stuff. That becomes less and less applicable. We have to be careful as a community. We can maybe go deeper into this later about who is mining. Today, about 30% of mining is done by the public companies. It's unclear the exact composition of the remaining 70%. I would speculate that it's somewhere around 5 to 7% that's done at the pleb level. It's probably the next chunk, which is probably about 30% to 40%, is done by small to medium-sized commercial operations, and the balance is probably really large privately held organizations, and some of those kind of bordering on nation-state level stuff. That's crude. I can't prove anything beyond the 30% of the public miners. We're going to have to be very careful, because I think the direction, the impetus, is for growth to come primarily from large financial institutions and nation states. I think that is the logical conclusion for the most motivated miners. And so we're going to need the pleb mining and the small, medium commercial mining guys to kind of hold their line. If we want to preserve the things that I think are fundamental to Bitcoin's value proposition, censorship free, being maybe the most important of those. That's only going to happen if we can maintain about 30% of the network or more in the plebs and the small miners. And I'm not talking about what happens in the next 2 or 3 years. I'm talking about what happens over the course of the next 10 to 20 years. But I think that's what we have to be careful of. It won't happen overnight, but it's in my mind, it's the very logical conclusion, and it's probably not something people like to hear, and that's partly why I'm out saying it, because it's preventable to a certain degree. But there's a decent chance that the miners of the future are more like the government of Russia and Citibank and American Express and Deutsche Bank than they are Mara and Riot and even those kind of organizations.
I find it very interesting, Bob, the 3% energy consumption number, because not a flushed out idea, but I've kind of had similar thoughts in the vein that I imagine that a lot of the miners coming on will be off grid at untapped energy sources. But then, of course, as soon as they come in and you have that, buyer of last resort, they start building in more and more infrastructure. I would imagine that you'd start to see other people kind of start to tap in and move in and start to outbid the miners. And so I kind of see, like, particularly if you think about like hydro and these things, that you might get infrastructure built out after the miners are there. And eventually they kind of get priced out and need to relocate somewhere else as well, too. Speaking to what miners can do and pleb miners and all this fun stuff, too, I was wondering maybe you could talk about what you're doing at Barefoot and your work with Ocean.
Sure. Well, first, we try to advocate very, very strongly for this off-grid stuff, because I call it wild mining. It's the term I prefer to use to describe it. And wild mining means not only off-grid, but generally privately held too. That I think you're trying to minimize the points of capture, trying to minimize the permissioned aspects of it. So, in other words, if you're a publicly traded company and you're mining on grid, you have a lot of capture points and you have a lot of permission points, right? What you do, how you do it, when you do it, require lots of other outside parties to approve what you're doing. And I can't stop. I wish it wouldn't happen, but I can't stop it from happening, right? It's the reality of the situation that we're there. And I think it's, like I said, it's kind of dangerous. So what I'm trying to do is build as strong an infrastructure as possible, pursuing wild sources. Now, one thing I want to say about wild mining or off-grid mining is that largely it will occur in smaller chunks. So you'll see a lot of mining in the few hundred kilowatt range or a few megawatt range, and it'll be pretty rare. Stranded energy that can be captured and processed at an economical fee is not often going to be in the tens or hundreds of megawatts. Or if it is, this is, I think, maybe what you're saying, it may be possible where you find a very remote river and you could do something like hydro there, but at a large scale. But you're going to have a really, really long lead time. You got to lay out a lot of capital and wait a really long time before that thing comes up. And then in the really long run, you might find that if communities build up around that it no longer can serve mining because it has to serve the population. I'm not quite sure how all that will work out, but I think that's where you were going with that.
Essentially, yeah, that the availability would bring in new demand.
Yeah. Now, there's the other thing about, at least in today's environment. So in the world of AI, the the wild mining generally does not have the uptime of the grid. I mean, the grid, especially in Western nations, is highly reliable, and so you can design out the small lack of reliability or quality in the grid power through traditional data center technology with redundant uh, all kinds of redundant technology and backup power, because you're generally, if you're off, you're not off very long. But in off-grid situations, like what we build, we never invest in that stuff. So what we do is pretty application specific to Bitcoin, and it would be really difficult, let's say on a natural gas well, to design something that could run in AI, because we have so many single points of failure along the way that, and when those things fail, it might mean you're down for several days. And it just, now AI may change over time as we're getting out of all the modeling stuff, and some other things, some other applications take place where you don't need to run applications that crank away for hours and days at a time consistently, and you can handle. You're just sending them more like small jobs that last a few minutes. It may be more applicable. But that was part of the other point too, though, was that when you look at that bell curve of the currently available electricity, now the Bitcoin mining industry is fighting high performance computing and AI for everything on the cheaper end of that curve, and generally they have bigger pockets. So I think even though global hash rate has still been accumulating, I believe it's largely been accumulating by replacing old technology. Let's say a given facility had S1990 terahash per second units in there, and now they've plopped in an S21 in the same bay. So you see a 2x or a little more than a 2x in the hash rate at the same power consumption. But I don't believe our total power consumption is going up a great deal at the moment.
Kind of just jumping off that point for a second there too, and we are getting close to the top of the hour. So again, anybody wants to come up, please do join us here on stage. Earlier, you mentioned that you saw there was something missing from the hardware design when you first got in, and you hinted at that maybe you might be looking at something hardware related again. I was wondering if you could expand on that.
Yeah, one of the scariest parts of the Bitcoin infrastructure is that the entire network runs on silicon and systems developed by two companies, MicroBT and Bitmain. And no matter who they are or what their history is, it doesn't matter. That's a very, very dangerous position. We also have a weird situation in that the ASIC, which is the silicon part, is not sold separately. In other words, if we look back at the way that the personal computer market was constructed, you had Intel creating the CPUs, we had Microsoft and others creating the operating systems and the application software, and we had the gateways and Dells and those type of companies designing the systems, the hardware part, right? And there was competition. Intel had AMD, and it had some other minor vendors like Chips and Technology and Texas Instruments at different points in times. And certainly on the system side, you had a lot of different things happening, right? Well, it created innovation. It was a lot of innovation that came out of that. There was a lot of specialization. Companies that were good at system design and manufacturing and production, by the way, as well as customer support and service and like those sorts of things. Those were the gateways and the Dells of the world. And we had companies like AMD and Intel building the silicon, a completely different skill set, both in terms of the development of the product and the support of the product, even the capitalization that went around it. All those sort of things were very different. So I think we're in a very unhealthy world where we have an oligopoly on the silicon and the systems. We have no innovation. If you're a company like BitX or FutureBit, or you want to build space heaters from the Bitcoin world, what you have to do is you have to take products from these other two companies and repurpose them, or you have to do things like desolder chips from broken hash boards and repurpose them, and you have to do it without like a data book or any information about the chip. So and people are doing it. I applaud it. I think there's some really great people trying to do some great things, but they're doing it with their hands tied behind their back. What we need is we need several companies designing the silicon. And so companies like Block and Blockstream have both put efforts out there. I have joined a group that we founded about a year ago called M5ers. We are designing our own ASIC. The group is led by a guy named Billy Kim, who was the godfather of the solid state disk, working for Samsung. And another member of the team was one of the designers of the Intel 486. And we are a pure silicon company, designing only for the purpose of creating chips that we will sell to anybody that wishes to buy the chips, and they can build whatever they want. They want to build a pool heater. They want to build a consumer-focused mining system, an enterprise-focused mining system. They want to put one in a satellite and try to mine in space. We don't care. We're going to sell you the silicon, and you can do what you want. And I think that obviously I hope we're successful, but I'm actually rooting for the others to be successful too, because I think we have to break this thing up to create an environment that has a lot of different sources, that allows creativity and innovation, and prevents the real unlikely scenario. I'm not especially afraid of it, of something nefarious going on in one of the chips or the systems that are produced by, I would say, these closed architecture systems.
Yeah, I think that
awesome.
The decentralization of the hardware is definitely something we need to focus on. So I'm looking forward to seeing that. I definitely wish you luck if you decide to pursue that route. I see we have Ian up here requested to speak. Did you want to ask a question or join in something we were saying?
Yeah, I did. Thank you. I just had a question about, I think it's called like cogeneration Bitcoin mining, where heat is the primary utility and mining just becomes the side benefit. I was wondering if you see that becoming a lot more prevalent among pleb miners for them to be able to get into it, given that like I see it as this type of setup lowering the effective price per kilowatt hour by offsetting the heating costs. Would that become a more viable trend for the pleb miners looking to just like optimize the energy expenses, especially if they're on grid?
Yes, I think that I think at some point though. So yes, and part of the reason I want those chips built is to allow people to be as innovative as possible and build those kind of devices. Like I would really love to see a device. Like I think, just to be clear too, from my earlier comment, we've actually been working on this chip for over a year. It'll take us. We're still about a year away from being able to produce it. It's a long process. It takes a lot of money. We do have a lot of obstacles to still overcome. Although we do have an idea that might get us something, an interim solution in the market a little quicker. But back to your question, Ian, cogeneration, whether that's done at the pleb level or done, at a company level, I think is a very good idea. And heat, whether that's for home heating, for greenhouses, for pet beds, for hot tubs and pools, and all those sorts of things are great offsets. I'm pretty sure, though, at the end of the day, plebs are going to have to make a decision as to whether or not they have some responsibility to Bitcoin itself to be part of the network and contribute hash rate. And in my mind, if you own Bitcoin, it's irresponsible to sit back and just assume that the security of the network is taken care of by somebody else, and that the obligation to do that is something that you can just ignore. Because if the whole community takes that perspective, we'll lose it. So like this cogeneration, like this heat generation or these different applications, I think are wonderful. The math is probably never going to work completely. I think it can offset some of the pain. But let's just use an example. If you're somebody out there that owns one whole Bitcoin, and so in present value terms, you have about $70,000 of value sitting there, it seems to me that it would be a reasonable expectation for you to spend a few $100s a year to be part of the network and protect that. And the great thing is that few $100s a year, as a percent of the value of the Bitcoin you hold, will get smaller and smaller and smaller with time. But I think you still have to do something, because otherwise I think you're just cheating the system. You're just a freeloader.
I'd like to just tack on to what you're saying there with a question. What would you recommend for people to just get into mining if they wanted to participate, like you said? Like what hardware specifically?
Well, I think right now, buying a BitAxe or, there are S19s that you could throw in. It depends on where you are, but I think everybody should try it and get exposed to it. I think a BitAxe for a few $100 is a good idea. Or you can pick up an S19 now, M30 for $300-400. You could throw one of those in your garage, and maybe only do it in the winter months. To Ian's point, like maybe only do that one when you want your garage heated in the winter. But participate in some way, and I think what you'll find by participating is that your knowledge level and appreciation for what Bitcoin is and how it works will skyrocket. And it still requires a little bit of hand-holding, if you're not, but it's not that hard. I guess there's plenty of videos. I think there's plenty of people in the community that will help you if you're struggling getting it set up and configured. But don't do it because, you have 9 cents per kilowatt hour energy and, the break-even point is 6. Well, you don't have to run it 100% of the time, but throw at least contribute a few dollars a month to the security of the network by turning your system on and mining. And like I said, you'll learn and grow as a result of it, and you'll at least be doing kind of your share of the housekeeping and administration and security of the network.
Excellent. Thank
That's
you.
awesome.
Hey, Bob, it's good to see you again. We met very briefly at BitBlock Boom. You probably don't remember me. Yeah, I just wanted to chime in on a couple of things that we're asking, and you were asking about the heat. So the thing is, and I think a lot of Bitcoiners actually get things wrong because they think that, as long as you say something that's positive about Bitcoin or mining, then it doesn't matter whether it's real or not. And so people just say things that sound nice. So with heating specifically, you have to realize it's unlike cooling. You actually counterintuitively can have more than 100% effective efficiency. You use a heat pump, which is basically like an air conditioner in reverse. So you're getting the air outside colder, you're heating inside. So your coefficient of performance is actually greater than 1. So that means you get more heat per kilowatt than a kilowatt of heat. It's a bit strange. So you can get way more heat that way. And so what that means is even if you're putting your resistive heat load into heating your home, that's not free in a sense, even removing the capex. And so at any normal residential rate, actually the math doesn't work out. So the only exception to that, really, one, not everyone has a heat pump today. The other thing is in extremely cold environments, your heat pump's not very efficient. And so, Bob, I didn't know you're working on this chip thing, and that there's another one beyond what Dorsey is working on. So I think that's great. In terms of the idea of contributing, I don't fully agree with the premise that the individual miner contributes usefully, because on the marginal difference, they could be buying Bitcoin, which pushes the price up, which drives more people into mining. The way I can see it work with something that's sort of beyond BitX, when you have chip suppliers like what you're trying to build now, is actually stolen electricity mining. And I think that's sort of the only way you actually get this really distributed layer of hardware. So if you look at mining today, and I don't have the large scale numbers exactly right. Last time I checked, it's on the order of a few $1 billion of electricity goes into mining, whereas there's nearly $100 billion of stolen electricity globally each year. And so given the difference in prices, maybe that's really only a 10x multiplier. And you actually get something like 5 billion in the United States. I think Russia's number one. So you have countries like Mexico where they just bypass the meter. And I was reading that 10 million homes in Mexico, for instance, are able to do this. So if you had something like a BitX that was priced really competitively, because you get this ecosystem of silicon development, and you have something that anyone anywhere in the world can plug in like that, and you can have zero cost electricity. That's what allows the pleb miner to actually be competitive and be competitive at scale.
Yeah, some really good points. I do remember you, by the way, from the show, from BitBlock Boom. The stolen energy angle is especially interesting. I can tell you that in 2024, global mining revenue is going to be on the order of $12 billion. And the expenditure on electricity is going to be between 8 and 9 billion. So I had never heard the $100 billion of stolen electricity before, but my wife's from the Philippines, and it would be, in fact, she's there visiting right now, and it would definitely be true that there's a lot of stolen electricity in a lot of those countries. Very dangerous, by the way, but it happens nevertheless. And yeah, it would be very interesting if even 1% of that were directed toward Bitcoin mining. It would be material. I do think, though, maybe where we differ slightly, and that's okay, is that I feel that the benefits of somebody mining, certainly buying a little more Bitcoin, spending a few $100s on more Bitcoin certainly helps. I would never discourage somebody from doing that. But I also think that by It's my belief that most Bitcoiners kind of stop in their education process at a certain level and they get intimidated and they don't understand the mechanisms by which block templates are created. They don't have a voice in soft fork activations. They like these issues just go completely over their head, or they think are irrelevant, or they'll be taken care of by somebody else. And I think a lot of the power of becoming a miner is becoming part of the community at that level and being part of the defense of the network there. Is that more important than buying more Bitcoin? We may differ, and that's okay. But that's a lot of my impetus, is thinking that we need people out doing that. Longer term, my math says we got to have 30% of the network in the hands of ethos-centric, properly minded people who will put Bitcoin first. Because we are, as Bitcoin picks up momentum, there's that old saying, like, Bitcoin is for enemies, right? Well, we are seeing the enemies, the BlackRocks of the world, come into Bitcoin. And as more of the world's economy and wealth become Bitcoin oriented, it will attract even more of them. And they're going to want to have as much control and power as possible. And it's more than we can get in here today. But I think logically what will end up happening is they will want to have a lot of control over block space, that they will want to be template creators. They will want to ensure that they and their customers and their partners all have guaranteed access space to the base layer on a regular basis. And that will lead them into mining. So if we let them capture too much of it, well, then we've lost. I'm not saying Bitcoin is over at that point, but it will have lost a lot of its core elements.
Yeah, the big challenge there is just energy infrastructure and the way electricity generation works. You always have a massive efficiency advantage if you're operating at a larger scale. And that gap is really large today. And the technologies that might shrink that gap to any meaningful degree, I think I briefly mentioned different things around micro turbines. If you're talking supercritical CO2, it's not something that can be built today. It might shift in the future, but right now, if anything, it's going to be more centralized, as there is now the bipartisan shift in the US in favor of nuclear. There's shifts coming in terms of how the Nuclear Regulatory Council works. And as that happens, that's going to be where the mining can go. And that's even more centralized and controlled if you're talking nuclear energy.
Yeah, I mean, I'm hopeful for SMR. I really hope that it becomes a lot more widespread in adoption. What I will say, though, too, is that this goes back to, I think, one of the first questions that came up. There's a lot of thoughts that come out of the community about the close association of Bitcoin mining and energy. And I know why that happens. I'm not saying it's a complete untruth, but it's a bit misleading. So if we look at it, if you go back to that number, I don't believe Bitcoin will be more than 3% or so of the world's electricity consumption. And part of that, I mentioned a number before. Bitcoin mining is still a very, very small industry. So at 12 billion a year, that's the annualized revenue of all the miners in the world, not just the public miners, but all the miners in the world, right? So that's a very, very small number. My old company, Gateway, in the year 2000, I mentioned this before, was basically the same size as the entire Bitcoin mining industry. And that was we were probably the 5th biggest PC company in the world at that point. So, compare Bitcoin mining compared to the personal computer industry of 25 years ago is just a small fraction of it. That kind of sets, from one perspective, the maximum. It kind of sets a maximum amount of energy that can be used by our industry, and it's too small to, I think, ever be more than a kind of a sidelight project for most energy companies. Said another way, Bitcoin is not existential to the existence of energy companies. Now let's look on the other side. In a world where the global economy has massive pieces, with Bitcoin as its centerpiece, so Bitcoin-based economy, access to Bitcoin and to the Bitcoin ecosystem become existential to financial services companies and even to nations themselves. And so the ability for them to mine at a loss, especially as measured by the block reward, becomes very reasonable. They will not measure the economic value of their participation in mining from the block, by looking at their costs against the block reward, but by looking at the costs against the total economic value of all the transactions and relationships that come with it. So Bank of America today has a IT budget of about $11 billion annually. So now they make, I forgot how much they make, $100 billion a year or something on that order. So they look at it completely differently. So somebody like Bank of America could jump into mining with $1 billion a year budget, and it really doesn't change anything about them. But if they don't get into mining, mining could become existential to them. So I'm not sure I articulated that well, but what I'm getting at is a high-level summary of why I feel that as the block space becomes scarcer and the block subsidy gets smaller, that it's the financial services companies that will want to be in mining a lot more than the energy companies that will want to be in mining.
Excellent. Well, thank you so much, Bob. And I want to be respectful of your time as we get close to the end of the space today. So I just want to ask you if there's anything you'd like to touch on before we wrap it up here, and where can people find you and learn more about what you do and get some more of that information there?
I'm Boomer_BTC on Twitter. You can find me on YouTube with a show called Old Man Yells. And you can learn about my company, Barefoot Mining, at barefootmining.com.
Excellent. Well, thank you so much, Bob. I really appreciate you coming and sharing your information. I always love learning about the mining industry. I find it fascinating, and all the stuff that is periphery to it. I also want to thank everyone that came to listen, and those of you that came up to speak and ask questions. Make sure you give all those guys a follow. And thanks again, Bob. Make sure you give Bob a follow on here. And you can also follow me at LiveFreeBTC or the Bitcoin Mentor handle to be notified when we do the spaces. They're every Monday, Wednesday, and Friday at 3 p.m. Eastern time. We also have Patrick up here, Bitcoin motorist. He's also part of Bitcoin Mentor. And if you'd like to learn more, you can go to bitcoinmentor.io and email one of us, book a free session, find out how we can help you with your Bitcoin journey. We cover anything from self-custodying, multi-sig, running a node, a little bit of mining here and there, and anything else that you're curious about learning. With that being said, I hope everyone has a great day, and we'll see you on Wednesday. Take care, everybody.